Everybody, Jason here. Happy Friday. I hope you guys are all doing well. So today we're down a whole percent, down a couple $1,000. So another kind of stagnant, boring day in the market. So today, I just want to go through and look at every single position that I have, see how quickly we can run through that, just to see if you guys have any questions or comments on any of it. See some of my good plays, maybe some of my bad plays too. I'm sure there's bad plays in here. So just starting right at the top with our things that we have expiring today. We have 4 of these. We have 2 broken wing butterflies on the SPY. We have 1 put credit spread on the SPY, and we have calls we sold against Tilray, which Tilray is doing super crappy right now, but that's okay. This is a long-term wheel. We have 2 more broken wing, or 3 more broken wing butterflies expiring Monday, and a put credit spread expiring Monday. This debit is a long butterfly on the SPY, so we'd need to hit 450 in order 450 in order for this thing to be profitable. Only am into it for $5, and another broken wing butterfly on the SPY. I have a put credit spread on Amazon that went very far against me, and when it moved down, because I foolishly played it right before earnings, right after, I went ahead and sold a call spread using that same collateral to collect a little bit more premium against it. So now we've collected $100, so we'll probably lose $300 totally on this play unless Amazon has a good bounce up. C1, this is a call that I sold against shares that I own. This is now in the money, and I will likely purchase this back right before expiration to keep my shares. Dropbox are 4 calls that I sold against leaps that I own, and we'll see those later on down the line because they are very far out. We have a Ford. I bought 7 calls. They were very cheap. I think they were $5 a piece, kind of a YOLO. See if the EV event that Biden had did anything for Ford, and obviously not enough. Foot Locker, Iron Condor. I'm going to close this out right before earnings, so we don't have anything crazy during earnings there, and collect whatever I can collect. We only have $48, and I believe I have a closing order. I don't have a closing order on that yet, but I will put one in at 75% profit, and if nothing else, we'll close that right before earnings. We have our Gap $35 calls that we sold against the shares that we own. MGM, same thing, calls we sold against shares that we own. Palantir, we have quite a few of these, so we have both leaps and a lot of shares, and these calls are sold against both of those positions. Another SPY broken wing butterfly, low risk, low reward. Tapestry, calls I sold against shares that I own. This one is not in the money, but earnings are coming up. I'm going to close that right before earnings. Just go ahead and buy it back. Take whatever loss that we have. I've consistently sold against Tapestry the entire time I've owned them, so a little bit of a loss on one of the calls is not terrible. 2 Tesla calls that I sold against the shares that I own. I believe we collected $120 a piece for those, so we'll just let those guys decay before we close them out, wait for another pop, and sell a couple more. Tesla put credit spreads. Now we're kind of getting into some of these guys, and we all know what those are, I hope, at this point. I have 1 Tesla. This is a long condor, which, if you look at the positions here, if you want to take a look, this is how this guy was sold. And so this was purchased for a debit, unlike an Iron Condor where you receive a credit. So I purchased this for $1, and if we end up next week between 7:10 and 7:30, this will have a max gain of about $400 for our $100 cost on that. Okay, let's see another broken wing butterfly on the SPY. We have an Apple call that we sold against one that we own, a 135. Down just a little bit on that, but we'll see the call I sold that against a little bit later on here. More Tesla put credit spreads, more Tesla put credit spreads, and Iron Condor that we did open up live. And I do have a closing order on this for 75% gain. We're already up 65%. Got a $123 credit on this guy. And we have more put credit spreads. Palantir calls I sold against the shares and leaps that I own. And of course, we'll see those a little bit later on. More put credit spreads, more put credit spreads, more put credit spreads, and more put credit spreads on Tesla. More put credit spreads and more put credit spreads. Quite a few of those. I know you guys are shocked since I like to play Tesla put credit spreads. We have a Google put credit spread here. We are up almost 50% on this guy. All right, put credit spreads. Another Amazon put credit spread at $3,100. So far, Amazon has kind of been leaking down a little bit, but we'll just hold on to that and wait and see. I have a call that we sold on Cedar Fair. This is a they own amusement parks. Netflix, Iron Condor doing pretty well on that. I think this is the second one that we opened. I think we opened this one up live, grabbed $138. We're up 50% on Netflix. Netflix, for the most part, if you look at the long-term chart, they've pretty much been barcoding between a couple levels. So I think those ones are pretty good. Another Iron Condor that we opened up live, down a couple dollars on that, but we'll need a little bit more time before we start to see the theta really decay. So we'll give that a couple more weeks before we start to really see some profit on this. Until then, we'll probably see just plus or minus a few dollars in either direction. Another Google credit spread just a little farther out, down a little bit on that. Couple Hawaiian airline calls that I have sold against shares that I've owned, and I've owned those for quite a bit of time. Actually, Hawaiian Airlines haven't gone up very much. More put credit spreads. These are kind of YOLO call debit spreads, some 990, 1,000, down a little bit on that. But if by the end of the year we happen to head up in that direction, those will print some pretty decent profits. More put credit spreads, more put credit spreads, more put credit spreads, and more put credit spreads. I definitely can't get enough of those. Here is the Apple 135 call that I purchased, that I sold the 155 against. MGM call that I sold against the shares that I own. I went ahead and rolled it out a few times, and MGM is so far up that this guy is probably just going to get exercised on me, and I will have 100 of the shares called away. When this started moving against me, I actually just went ahead and purchased another 100 shares so I could continue to own them and sell against them. And we have a $30 Palantir call expiring in January. Definitely moved against us, but you never know. Palantir can definitely have some movement and is not quite a meme stock, but kind of semi meme stock. So who knows? I'll just keep that. And if we lose on that, we lose on that. I think we initially spent what, $300 or so. Yeah, $324 on that one. More credits, actually a couple credit spreads and a few debit spreads. So a 690, 700, which are up on a 790, 800, expiring in January. So we're kind of break even on that guy. I just won't be shocked at all if we end up $800, $900, $1,000. I think we'll have some period of time where Tesla does rip up quite a bit from where the current levels are. We keep seeing consolidation, a leg up, consolidation, and a leg up. These are some very high risk, high reward, but also at the same time, very cheap plays that I grabbed for $15 a piece. These are butterflies, and you can see the positions here. And if Tesla is right around that $900 level in January, these things will print. If not, then we're out our $75 total. So not a big deal, but just a complete YOLO there. Another put credit spread. And if between now and, I don't know, a couple more months, we don't see the movement in Tesla that I'm expecting, those guys, I'll probably just roll out, grab a credit. Here's my 35 put credit spreads on Tesla that we've held for quite a while. Rolled those out last time while Tesla was dipping down quite a bit. And another put credit spread even out until March. That's pretty crazy. It's super far out. But we're definitely up on that. Now we have our Palantir calls. We have this one and this one. So 4 here, 2 here. And this was basically insurance. So I can purchase the shares down the road for $20 a piece. We're up on both of those, and we're continuing to sell calls against those. We have some Dropbox calls expiring January 2023. And these are the ones that I sold the calls against that you saw a little bit earlier. So we're up on those calls, and we're up from profits we've taken by selling calls against those. So those both the Palantir and the Dropbox is something that you would look at as a poor man's covered call strategy. Technically, they are a diagonal, but it doesn't matter what you call them, they're the same play. DraftKings, a $50 call expiring January 2023. As you can see, we're massively down on it. I spent, I think, $2,700 on this originally, so we have quite a bit. I may consider averaging down on this possibly, but I don't think there's any lack of gambling in the United States. So ultimately, I'm pretty bullish on DraftKings. And then Snapchat. We had the $60 calls that we purchased quite a while ago. We were up on those. So I turned this guy into a debit spread and basically collected all the original cost back, and now we're up an extra $170 on that portion, and I could always sell this out and collect profits between the two. And we also have another $1,500 we can collect if Snap is above that $75 level in 2023. But absolutely no risk there. I have 100% of my premium back. Holy smokes, this has taken already 12 minutes just to go through these. Shares, now, jumping into these. So Tesla, you guys know I love Tesla. So 207 shares in this account alone. Coca-Cola, a couple hundred shares in these. I look at Coca-Cola and AT&T just kind of as a piggy bank, a good place to put it, collect some dividends, and relatively safe. They've actually, Coca-Cola has obviously performed quite well for me. On the other hand, AT&T not so much as far as the stock return, but since we've collected 7% dividends on it per year, and we've held them long enough, we're actually up overall on AT&T. I do have DRIP enabled, which is a dividend reinvestment. So when we do get the dividend, it goes right back into purchasing shares. Palantir. We are finally up on our Palantir after quite some time. We were down a lot for a long time, but 460 shares. And when I exercise the $20 calls, we'll have well over 1,000 there. Quite a bit of equity going on. Tapestry and Gap, both of these I purchased while the market was way down during that initial pandemic super drop. So they've been both very good for me. You can see we're up like $11,000 between the both of them. MGM, those are the ones that I sold calls against. I sold that one that went way in the money, and so I purchased another 100 shares of it so I could take advantage to the upside. So you can see we're up $4,000 on those positions, although when that one call does get exercised that I sold, we'll be forced to sell 100 of them at whatever it was, $27. So that'll be, I won't be able to have all this gain. Cedar Fair, this is the one I sold call against. Up pretty good on that. QYLD, we purchased those. Another kind of piggy bank situation where I just put some money in there. I actually purchase a little bit of it every single day, and this returns a 10% dividend per year. So we basically get 1% of the entire value, which currently is $7,900. So we get about $79, $80 every single month on that, and it's a monthly payer. Hawaiian Airlines, something I bought when it was pretty cheap and sold calls against it. Those are the ones that you saw earlier. Clearway Energy, this is ones that were up quite a bit. Bought these for $20 a piece, made $1,200 on it. But I also have a $30 call that I sold against it that I am down on, and those I'll probably just purchase back. So since we're up so much, that's okay. We can take a little bit of a loss, not really a loss, but not as much gain on it, and we'll just keep the shares. Nintendo, we own 5 shares in Nintendo. There's a little bit more story behind this, but I won't go into it. And then we own some SPY, some Qs, and I do make daily purchases. This is what that little plus sign is. We just add to these every day, just kind of adding some stability and a little bit of dividend to the overall account. Tilray, $300 shares. We're down quite a bit on the shares, but we've sold premium, and when we got these shares, they were because of puts that we sold, and we got assigned on these 300 shares. So even though this looks terrible, it's not as bad in reality, and I'll just continue to sell calls against those. I don't know why I have a whole 0.59 of the leverage Qs. I could probably just sell those. No good excuse there. And then Robinhood, have 10 shares. We had 30, but when it spiked up, when we were seeing near 70, since we had basically doubled it, went ahead and sold 20 of the shares. So even on these 10 shares, we're still up $148. But since obviously we use Robinhood almost every single day, well, every single trading day at least, might as well have some of that in this portfolio. And then you can see my reoccurring investments. Palantir, I purchase $20 every day. The Qs, $22 every day. QYLD, $22 every day. And I do purchase some SPY too. We purchase that every single day. So that is the account. Holy smokes, 17 minutes. This took a lot longer than I thought. But I've been asked before a couple times, like, how do you manage so many positions at one time? Is it too much for me? But I know what I have, what I'm holding, and you know why that is. So not terrible. And that was kind of almost a little challenge for myself, just to make sure I could go through my whole account and tell you exactly what every single play was and where I need to be in order to be profitable on most of them. So there you guys go. Love you. Happy Friday. And let's make a lot of money.